All right, I greet you all from wherever you're watching from today. Very quickly, before we delve into the technical analysis on our chart today, we'll be talking about gold precisely. I don't want you to also neglect the fundamental analysis. Fundamentals are very important because they are the momentum, they are the force that drives the market. Fundamental talks about our CPIs and our GDP, talk about the economy, the policy of the big banks, okay, the Bank of England, the central bank, the policies of the bank, how they affect the economy generally, the world economy. So you also need to put this in check so you don't mix both ends. Now, understanding your fundamentals and then bringing your technical analysis for proper execution to know where to enter or to exit a particular trade gives you a stronger conviction. So like today, there will be lots of things to do with the CPI. The CPI in full is talking about our customer price index. It is a tool that helps economists to measure changes that vary between prices of goods and services in the world generally. So this is a momentum behind the market that could drive the market higher than the previous high or lower than the previous low. You understand what I'm saying? So becoming a forex trader, you really need to take it as a job. You need to understand the nitty-gritties, understand better. So it will really aid your understanding to know the best place to take up a trade and all that. So like our gold today, we could see that our gold was actually making a higher low. You can see here that my gold actually made a higher low here. Okay, so from this point is higher than this particular point here, like you see. Okay, and this point is also higher than this point, so this making it a higher low, lower low, higher low. So we expect another higher lows within this angle. You understand? So I just want to break it down, make it very simple for the layman to understand that forex trading is not actually very hard, but it is it's not just a game, it's something you should take as a profession and you treat it like a business. Last week there was resistance. Okay, so we took up this trade. Now we could see that from this level, if we take our horizontal to this level that was met before, about that's 3040 at the price at the price of 3040. There was resistance. We can see it here that we had this resistance. I will be boxing it, so I want everything to be very clear. So when you comment on the comment section, you don't get things confused. There was resistance between this level. All right, okay, so now if you see from that level, from this level, market could not break above, and then we had a bearish candle. So for some persons that wasn't aggressive to take this trade at about 34,000, when they saw this bearish and a retest of the bearish, all right, so giving us a higher and a low, the retest now was where some persons entered the trade at 370. Okay, so it's not just about entering the trade. We want to understand why should we enter a trade at a particular place. Why am I entering this trade at this particular point? Why? So these things guide you to understand that, okay, even if I'm taking up this trade here, these are my reasons, these are my judgments. Okay, so you have a sound judgment to every trade you take, and your mind will be what? At rest. All right, so now we have seen pullbacks from here. We could see there are pullbacks here, Let me quickly map it out. So we could see that there are pullbacks at this level. There was a pullback here, all right, and it also went here. So I'm going to started buying very shortly. Okay, but from the look of things on our chart here, because we describe this market according to what we are seeing, we don't prophesy that the market must go this way, but from what is already before us, that is where we describe the market. Although at this point we already have what, a double top. This like a double top here, a small double top. Now I will take my horizontal to this level now to show you that at this present level here, even from our daily time frame, there is a resistance. Okay, there's a resistance. So I am believing that gold will have a little inducement to 33,051 to 52 level. If eventually gold will come down from this level, then it will have a little inducement above this level where it is. All right, but it may not also play out that way. Now the most important thing is psychology. We've understood that several times when gold got to this level, it went as far as hitting 3,355 level. We have seen on several occasions, all right, that whenever it got to this level, there is also what, a retracement. So gold may even push to this particular level. The gold may likely push back to 3,362 point level. This is what I mean. So I am also analyzing that gold will come back to this level if there is a major push in the market. Like today, the London time, by the overlapping of the time, when overlapping may take place today, about 1:30 to 2, there might be a move and gold may likely come back to this level. All right, but how do we stay more secured in this market that we don't be take out unaware? Our FIBO will help us to do that. When the price are what, falling, we take our origin of the FIBO, draw to the lowest, height that was met, that the lowest height. All right, so now with our FIBO, this is the zero level here. I will draw it to this height that was met before the last pullback, before it started moving up. What are the things we're looking at for here now? Things we are looking at for. Some persons are already selling the trade, fine and good, but we want to have more confirmation to this. We know gold is still coming then, but we want to have more confirmation. All right, so like you see here, it's already on the golden zone, but gold is a very crazy pair. It can take off from here and push up back, sweeping out all the people that have just started selling. In order not to be caught unaware, we want this bearish candle to be fully formed. When the candle is fully formed, then there will definitely be a retest of it. All right. Secondly, we also want this structure here to be broken. We want this structure to be broken, and when we go by trend, because FIBO doesn't work alone, when we go by trend, I can tell you for free that their tendency that gold will struggle in this level eventually before it comes down. At this point now, we are yet to have a significant trend line because we had only one touch here. So there are still tendency that gold will come up averagely to about 3,352 level. If it fails to come to 3,368 level, eventually it will come to 3,352 level before it comes down. We need to have a complete touch here. Now if it bounces on this trend line and doesn't break above, then we should be looking at for execution by entering. We should be looking at to execute our entering positions. So if we get to this level and it doesn't break above the trend line, then anything can happen. Gold is very crazy. It can as well break the trend line and continue its uptrend. But eventually, if it bounces on the trend line, okay, if it bounces on the trend line and give a little break below this level of 61.8, then our sell becomes more valid. I am actually looking at to take my sell at the close and open candle below 3,335 level. This is where I'm actually looking at for a valid sell. Once this candle closes below the 61.8 zone and opened below it, then I'll be sure to take up my trade. I want to believe that this analysis was clear and was also helpful. So we're looking at to get more confirmation if the gold is still going to go down. All right, we want this gold to give us a significant touches of trend line and bounce below it. One. Secondly, gold is currently struggling at this level. There is already a resistance, as we have seen already. In fact, gold actually, there is a resistance here. So if it continues resisting this level, then break below, give us a break below where it is currently and retest below where it is now, we have our confluence also. Thirdly, let me delete this fib now. I think we don't need the fib again. Alright, so with our trend line, we can see that at this point we have this called a bearish flag. This is a channel like a bearish flag. Now, maybe you don't want to rush about this entry, you don't want to be aggressive, then you should allow gold to break below this level. So we want a break. We want gold to break below 28 and retest below 28, this will give us a more valid sell execution. If gold breaks below 28 and retest below it, we have a more valid execution, and which may be giving us a very high profit. If this happens, we're expecting a profit of about this level. Eventually this happen, we'll be having 2 times take profit, one at let's say 3,300 piece, and the other one at about 32,065 pips. This is just the way we analyze our trade. We don't just take trade blindly. We watch at the trade. We wait for the trade to really play out, expecting what a bounce here, a break and retest of it to the downside. If this happens, then we know, in fact, without any fear, we take the trade and allow the trade to run on our side by giving us profits. Yesterday I made about 230 pips. That was how I smashed the market. 230 pips was what I made out from gold yesterday. So good to have you watched those things. If you have any questions you would like to ask, come to the comment sections and we did be glad to answer your questions. Thank you till we meet